this market update. It's October 21st, and we're gonna discuss what happened last week on the markets, and then also talk a bit about what happened this week. And of course, we will be taking a look at a couple of charts. But before we start, as always, I need to stress that financial markets, unfortunately, is high risk. We may lose all of our invested money. Okay, good. My name is Alejandro Zambrano, and I'm the Chief Market Strategist here with ThinkMarkets. And I've been trading the markets for many, many years, since 2006 to be exact. So let's see if I can shed a bit of insights and maybe guide you guys towards the most interesting setups of this week. Okay, good. Let's talk about what happened last week, right? So Trump is leading and the dollar is gaining, and you had a new all-time high in the S&P 500 and in gold prices. In addition, crypto prices are waking up. We have seen some stellar moves this weekend. One coin I saw gained with 25% on Saturday and then added another 80% on Sunday. So the market is starting to wake up, and we're starting to get more asset classes trending, which is obviously very exciting. So why did it all gain last week? Well, it gained against most of its major peers, and it also gained against the ECB, against the euro. And one of the reasons is that the central bank of in Europe, they cut interest rates, as we talked last week, by 25 basis points. So the new rate is at 3.4%, and they were slightly dovish. So they said that inflation risks might be tilted to the downside. That means that inflation might drop more than what the ECB is expecting. And if that were to happen, they might be forced to ramp up the pace of rate cuts. Right now, the market thinks they're going to be cutting with 25 basis points at their next rate meeting. And there was a 20% probability or so that they're going to cut with 50 basis points. Why? Well, because inflation is at 1.8% and their interest rates are at 3.4. In addition, what's also interesting here is that the European economy is not particularly strong, but because they're cutting, it should lead to higher house prices, more investments. So they're trying to find that good balance there. Anyway, long story short, most likely EURUSD will continue to drop to the downside, and you'll also have the dollar being quite strong against other currencies. Another reason why the dollar is strong is that former President Trump is taking the lead. So there's 7 swing states. These are the states that will most likely determine who is going to become the next US president. Why? Because there's certain states where it will be very difficult for President Trump, former President Trump, to win versus Vice President Kamala Harris, okay? And these swing states, Trump is leading in all 7 of them. Now, he's not leading by much, so he leads by less than 1 percentage point, with the exception of Arizona and Georgia. In those states, he's leading with about 1.8 percentage points. But because this is just a poll where they ask people, how are you gonna vote? The margin of error is between 2 to 4%. So he has to have an even bigger lead so we can with certainty say that he is going to be the winner. The interesting bit though is that he's leading across the board. What else? Betting markets like Polymarket give him a 59.9% probability of a win. And that is something that is obviously good overall. But again, the swing states is what's the most interesting thing here. Let me just see here. I'm not sure I'm using the right microphone. There we go. This should be the better microphone. Hopefully that works better. Also, another thing, so the interesting thing with President Trump is, former President Trump, is that he would like to cut tax raises across the board. So he wants to initiate the US economy. He wants to make the pie bigger, okay? He wants more people to get involved, all right? And that is usually good for stock markets. So that's why also stock markets are up. They're also up because we had Q3 earnings last week. It started properly now. and the results have been good so far. In terms of crypto, you have Trump that would like to deregulate crypto, and then you have Harris. Her team is said to would like to replace Gary Gensler. Gary Gensler is the head of the SEC, and he's been very, very much against crypto. As you probably read, the XRP are in a long multi-year battle with, have been in a multi-year battle with the SEC, and they're literally just trying to kill the market in the US. But now they're looking to replace him, and we already know that Trump would like to do the same. So it's looking good for crypto right now. Now we have a webinar on Wednesday in the afternoon, where we have invited Acuity. Acuity is the company that ThinkMarkets uses for signals, and we're gonna have a nice little debate and discussion on this. So I'm gonna be joined by Joe Neighbor, which is head of retail at Signal Center Acuity, and we're gonna have this nice conversation and talk about what to focus on. And if you want to know more about that, just go to thinkmarkets.com and find the under learn more and news section. You'll find the election page there. You can find the invite to the webinar as well. If you're a client or been a lead in recent months, or been interested to become a client, then you should also have received an email. Okay, let's move along. So what's happening this week? Unfortunately, not too much. There are some specific data points if you want to focus on certain specific assets. So for example, you have dollar South African rand, which could move quite a bit on South African inflation figures. You have a Bank of Canada rate meeting on Wednesday, and typically 75% of all recent rate meetings have led to the dollar CAD moving higher. In other words, the Canadian dollar losing out, okay? And in typical range would be 53.42%. So that is something to keep an eye on. Maybe like dollar CAD, CAD yen would be a nice mover. We have some speeches as well. Head of Bank of England speaks on Tuesday. The head of the ECB speaks on Wednesday. And we have, again, very specific data points like Norwegian unemployment rates. You can trade maybe dollar, Norwegian kroner. And then you have jobless claims, German IFO, and durable goods orders. So there's nothing really here that's gonna move things around. At least I don't think so. You can probably have, obviously, technical trading, profit taking and things like that. But yeah, it's looking all right here. Next week, of course, after this, non-farm payrolls, ADP, ISMs, and then US election. All right, how about the charts? So last week we said as long as you traded below, I think it was about 1.10 or so, a bit more maybe, 1.1050, we said we can push to the downside to reach 108. We reached 108.09, so pretty much on target. And for now, as long as you're below 109.40, we might have a bit of corrections, but I think we need to go down here and spend a bit of time here on that trend line. And people say if Trump would win, that EURUSD is going to go to 0.95 because he would look to boost the economy, but also introduce tariffs. Now, the tariff bit is super interesting, and we'll talk more about that in the webinar with Acuity. Oil, last week we said we're creating maybe an inverse head and shoulders with a left and a right shoulder, but I said as long as we're below this level, we can drop. And with the drop, we dropped with about 8.5%. And as long as we're below 79.53, the market's going to be bearish and people are going to try to short between 76.75 and 79.53. Why is this happening? Well, it's happening because OPEC Plus is looking to ramp up production. Number two, tensions in the Middle East have dropped quite remarkably. It was anticipated that Israel would engage with Iran, potentially attack crude oil production facilities. And if that would happen, it would knock off a big portion of production, which would easily spike oil prices maybe to $90 a barrel. In addition, there could be even more tensions with blocking oil moving out from, say, Saudi Arabia that goes alongside the coast of Iran. So there's a lot of things happening there, but it hasn't happened, and that's why we continue to be in a downtrend. Gold prices, last week we said if we break above these levels here, we could push to the upside. That happened, and I said we can reach 2,720. We reached 2,722. My long-term target remains at 2,900, and that's based on a big pattern. Plus, if you look at the oil prices, inflation adjusted, we can definitely go higher. But even though I think we can go up there, I think we need to always pay attention to the short-term risk to reward ratios. And it says that we can be bullish, but we should be bullish between 2,689 all the way down to 2,662. How about the S&P? Last week we were trading here, and I said if we go down a bit, I think people are going to buy, but we didn't go low enough for markets to buy. They just pushed higher, and now the trend is bullish above 5,811, and between 5,500, sorry, 5,842 all the way down to 8,511. The trend is bullish, targeting 5,882, followed by 5,925. The weekly article will be live on ThinkMarkets in the next hour or so. You will be able to read all this as well and look at all the charts with even more detail if you go to thinkmarkets.com. Now, let's see if you have any questions. If you don't, we're going to wrap things up. And if you're watching like a recording of this, then you're always welcome to drop questions, and then we'll follow up with you throughout the week. So we have a question. How do U.S. election impact global markets and currencies, particularly emerging markets in the U.S. dollar? So the way this works is that we have a webinar on Wednesday when we're going to cover this. But we can also on thinkmarkets.com, we have a special page. But let me see if I can help you here right now. So the way an economy that is growing, so for example, the economy is growing faster than expected, so more people are working, more people making investments. What happens is that money flows to the stock markets, supports the dollar, for example. People want to make investments in the US, that supports the dollar. People want to move to the US, that supports the dollar, okay? And then if the economy is too strong, interest rates need to remain high. And whoever has a good amount of economic growth and high interest rates tend to see their economy, their currency gain. So that should boost the dollar on its own. The second thing is that he's looking to implement tariffs. That means that if you want to buy a car or a refrigerator that is not made in the US, you might need to pay 20% more. And that will usually lead to higher inflation. It will also lead to the fact that people will not buy foreign-made products. So they might say, okay, maybe I should buy, they still might buy a foreign-made product or a product made by a foreign company, but they would make it if it was made in the USA, and that will increase prices. Or they're just not gonna, they're not going to buy, which would reduce consumption, which would actually hurt GDP. So, but if we have high inflation and people just buy local stuff, then they would need to spend more money, and then inflation goes higher, and that would keep interest high, and that could push the dollar potentially to 0.95. So substantial drop here by the end of next year. Now, when can it backfire? Well, it can backfire. So in other words, it can go terribly wrong, like it did roughly 95 years ago. Well, 94 to be exact. So in 1930s, we had the Great Depression. What's interesting is that back then, because we had World War One, farmers and production of farm goods, agriculture products in Europe was decimated. So Europeans were buying things from the Americans, okay, from the US, and they build up big production capabilities. But then obviously at one point, production is going to pick up in Europe as well. So then they were having issues where they were having too much production and they couldn't sell their stuff. So what happens is that they said, oh, let's introduce tariffs. Let's, you know, limit. So European stuff that comes here, that is going to have a higher price. So then Americans are going to be forced to buy our products, okay? So they introduced tariffs, and they were about 20% across the board on many different goods. And that's actually exactly what President Trump is looking to do this time around. But what happened was is that the Europeans said, and also the Canadians even said, no, we're not going to accept this. If you are going to put tariffs on our goods, we are going to put tariffs on your goods. So they did that. So you know what happened? Trade dropped with 65%, global trade. So suddenly people are not making business anymore. And what happened was that when people don't do business anymore, when you stop talking with each other, that you had a massive worldwide recession, which then triggered, definitely helped to trigger World War II, right? So it could be bad as well. It depends if President Trump, like what he does, like if he says specific sectors like we did last time, like steel and aluminum and certain things like that, maybe car production, that can work. For example, like right now, Europeans, but also US is imposing tariffs on Chinese electrical vehicles because the cars that they're producing are much cheaper, so they're competing with the domestic production here. And I'm not an expert on it, but there's talks that, or realistically, they say that maybe the Chinese have an unfair advantage. You know, maybe they're getting support from the government. What happens though, which is interesting, is that us as a consumer now, you need to buy the more expensive cars because if you want to buy the Chinese cars, you know, you need to pay much more. But when you do selected stuff like this, it's not going to break the whole thing. But if you do like widespread tariffs, that's when you're getting serious trouble. And what's also interesting at that point is that the US stock market, it was already on its way down before the tariffs were introduced. But as far as I understand, the markets were down maybe like 40% or something like that when they introduced these tariffs. But then it dropped even more. I think it dropped to maybe 65% or so from the highs on the back of these tariffs. And so it's not really good for business. But we need to see. What people are saying is that he'll go ahead and cut taxes and do this stuff like that, and then he will try to negotiate. And then if negotiations don't work out, there will be a situation where maybe they will introduce tariffs. And if that will happen, and then it's going to be a process, right? So you have maybe like 1 year of good times, and then ultimately if tariffs are introduced, especially across the board, then you'll have like a really, could potentially have a very bad experience. From a trading perspective though, it could be the golden years. When the markets are quiet, when it's easy to trade, you don't actually make too much money because the market moves slowly. So unless you got like a really good entry, then you would effectively miss out as well. You know, you have to pay interest rates, so financing fees and stuff, holding positions open. So when the markets, when everything is very good everywhere, many times trading is not that interesting. But when you have change, especially political change like this one now, or like recessions, that's when you make loads of money, because right now the market is going up and you have change, you know, maybe crypto space and stuff like this. But imagine if we do have a recession, then the markets collapse, so you can be short and you can buy things that go up when the markets come down, and then when the markets bottoms out, you have that crazy boom again. Like, remember the COVID drop? So we had massive drops in the stock markets because of COVID. That could be traded on the short term, and then when the market bottomed out, the market did like about more than 100% or so, and certain cryptos and everything did like several hundreds%. So with change also comes opportunities, and it can give you an opportunity to hedge, to make money while the rest of society is effectively struggling. Okay, good. It looks like we don't have any more questions, so we're gonna wrap things up. If you like this, don't forget to join us next week, same time, for the next market update. All right, so no more questions. Thanks so much for watching, and I'll see you guys hopefully on Wednesday. Head to thinkmarkets.com. We'll see if we can drop the link below here as well so you can join for that webinar. Thank you very much, and see you next week. Goodbye.